Hello students, welcome back to channel Global Online. So if you are preparing for the upcoming NTA UGC NET 2025 December attempt, especially from commerce and management background, I have come up with the very important chapter, that is accounting and auditing. Okay. See, you know what is most important factor to increase your score in the paper 2, especially if you are from commerce and management background, the practical questions. Okay, and to solve the practical questions and increase your score, you need to clear your practical concepts. Okay, so most important unit, that is accounting and auditing, the practical unit, I will be teaching you in a very easy way and easy languages. We will start with the financial statement and financial ratios today. So if you want to increase your score in the paper 2, watch this video till the end. All right, so we will begin with the major financial statements first. Directly heading towards the ratios is not the good idea. Before that, we need to understand what are the financial statements, why it is important for the business entities and companies, right? So major financial statements are like balance sheet, we have income statement, we have cash flow statement, then statements of changes in the equity, right? So major statement in the company that we prepare to show the financial condition of a company or a business, that is your balance sheet. We call it a king of a financial statements, right? So in the balance sheet, the most important factor is asset, right? I'll show you how assets are calculated. Assets is equal to liabilities plus equity, correct? Where asset means the most important factor in the balance sheet, which is the resources which is owned by the businesses or a company. Like we have a cash, right? We have a cash, this is the asset. We have inventories, right? That is also your asset. We have building, right? We have machineries, right? These all are combinedly called the assets of a company, right? Then we have liabilities also. The liabilities is what? To run the business, we are just taking money from outside. These are the obligations owed by the outsiders, like loans, correct? Loans. Then we have account payables. These are the liabilities of a company, right? Then we have equity. Equity means the share capital or retained earnings of a company. So combinedly, these are calculated, right, in the or throughout the year, we can say. That is called balance sheet. So balance sheet is the king of the statement, which is directly showing the financial position of a company or a business, correct? So this is very important. We have multiple kind of ratios in the balance sheet as well. Later we will discuss it, right? Second statement, it is income statement, that is profit and loss profit and loss account, correct? It shows the company's financial performance over a specific accounting period. We call it month, quarter, or year also. Okay, so revenue is the most important point here, or we can say the net profit and loss we calculate through profit and loss account. Okay, we calculate profit and loss account just to know the whether we have a profit in this particular year or we are bearing the losses, correct? So throughout the year we'll calculate it, throughout the month we calculate it, and throughout the quarters also we calculate it. So most important factor is net profit and loss. Okay, so I'll write down here, or loss, correct, is equal to revenue minus expenses, correct? So in the profit and loss account, the most important factor is expenses and revenue, or we call it expenses and the income, correct? So revenue or income, that is the income from sales or other operations. Whatever the operations are happening throughout the year, throughout the month, and quarters, that will totally calculate it. And then expenses like cost incurred for salaries, rent, depreciation, and other things, okay, those all things will be calculated. When revenue is exceeding, that means we are having profit. When expenses are exceeding, that means we are bearing the losses. That is why the income statement is very important in the company, to know whether we are going in a right way whether we are profiting, whether we are bearing losses. Correct? Next statement is very important, cash flow statement, which shows actual cash we have in a business or cash equivalents in a business, or we can say the flow of cash or cash equivalents, right? Cash inward, cash outward, both the things will be calculated in the cash flow statement. So in the cash flow statement, we have three sections. One is operating activities. Okay, cash is coming and outgoing through the operating activities. Okay, or we can say cash generated or used in the core business operations, that is the one operating activities. Okay, secondly, we have investing activities. Investing activities, correct? In investing activities, the cash which is used or which is received from the purchasing or selling the assets. Okay, or we can say purchasing and selling of the investments. Okay, through that purchasing or through that selling, whatever we get or whatever we use it, that is calculated, and that is totally coming in the investment activities. And thirdly, very important, that is also financial activities. Okay, through any term or through any activities, whatever the cash is doing, like inflow or outflow of the cash, that will be calculated in these three activities. Okay, in the operating activities, whatever the core operations are happening in the business, that will be totally separated in the operating activities. Whatever the cash we have used, okay, we have expensed or we have received, okay, from purchasing or selling the assets or investment, that is called investment activities. Then financial activities, okay, we are getting the cash from the owners or the lenders, like issuing shares or loan repayment, that is called financial activities. Understanding this cash flow statement is very important, which helps us to assess the cash liquidity, operational efficiency, funding needs, whether we need funds or not. Okay, all the cash flow will be calculated or will be stated in the cash flow statement. Very important statement. Clear? Even in the cash flow statement, we have multiple kind of ratios. Later we will discuss what kind of ratios we have. So next is statement of changes in equity. This statement is also very important to know the movements of the equity during the accounting period, right? It's like components we can have in this statement. The share capital we have. Okay, any changes in the share capital will be stated in the statement of changes, right? Then we have retained earning, right? Then we have reserves, correct? Then other components like incomes, comprehensive incomes, like foreign currency translation adjustment also, right? These are the components we have in the statement of changes. For example, we have a retained earning 5 lakh rupees. Okay, 5 lakh rupees retained earning was there. It was increased to the 8 lakh rupees, right? This 3 lakh rupees, how this growth has happened, that will be stated in the statement of changes in equity. Correct? So that is why this statement is also very important. Next is ratios. Okay, so we have liquidity ratio, we have solvency or leverage ratio, profitability ratio, activity or efficiency ratios, then market ratios. These all ratios we will be going to discuss in the next session, right? But some basic things I'll discuss with you, like liquidity ratio. Liquidity ratio has two ratios, that is current ratio and quick ratio. Okay, what is the formula, we'll discuss in the next session. Then we have solvency or leverage ratio. It is also have two kind of ratios, like debt equity ratio, right? And then secondly, interest coverage ratio, right? Then we have a profitability ratio. it has different kind of ratios, right? Like first is gross profit margin, secondly net profit margin, thirdly return on equity, and fourth one is ROE, that means return on assets. Okay, then we have activity or efficiency ratios, right? Activity or efficiency ratios, asset utilization we call it. It has inventory turnover, right? Firstly, and secondly it has debtors turnover, correct? Then we have market ratios. Here I'll write it down. Okay, market ratios has two, like EPS, that means earning per share, and then PE, that means price earning ratio. Okay, these all ratios we are going to discuss in the next session. For that reason you need to stay connected. If you have not subscribed the channel, please subscribe the channel. All right, so thank you so much everyone for attending this session. See you in the next session.